bring in markets correspondent Kevin Green, who's joining me now in a different picture than 24 hours ago. Certainly yesterday morning, most of us had come to work. Some jitters on Wall Street. I mean, today we're seeing the VIX down 16%. Yesterday it was at 60. A different picture this morning. What are you watching specifically? Good morning, Kevin Green.
Good morning, Nicole. Yeah, we are definitely seeing a different picture. You're seeing around 93% of the stocks in the S&P 500 in the green so far this morning here. And that's very strong when you're looking at market breadth, from information technology leading the way all the way down to staples, seeing some green on the screen here. So a lot of positive momentum based on some of the news flow here. I think it's also a little bit mechanical, right? We had a little bit of a sell-off, an aggressive sell-off. We have very low book depth and liquidity, and it doesn't take much to move prices up higher here. So if we're looking at the daily chart, what would you like to see if you're a bull in this market right now is potentially a gap test of the S&P 500, which kind of starts at around 5,300 or so here. We have a gap between 5,300 all the way up to around 5,398, basically 5,400. So around a 100-point gap to the upside here. This could be your first area where you do see shorts potentially coming into the market here. But once again, we have some market breadth taking place today, and that gives you a little bit more strength or a strong foundation in order for us to try to continue to move higher. If we're looking at it on an intraday basis, I'm kind of looking at 5250 as your first area of resistance. We're sitting in around 25 points away from that, Nicole, to the upside here. So that's going to be a key area for us to really try to focus on. And if we're able to break through potentially another 100 points to the upside, 5350 is really where I'm seeing a lot of the call selling flow happening for a lot of these institutions. So that could be another area of resistance, or maybe a target that the market tries to hit. But if we do get any type of failure, we have to hold 5,000. 5,000 is a really major level when you're looking at options positioning pretty much throughout the remainder of this year. And if we have some form of a breakdown below 5,000, you're looking at 4,800. So we still have a very wide range right now. That wide range is kind of evident by the VIX, as you kind of talked about. I mean, we're still seeing the VIX on a relative basis still elevated, pricing in around a 2.25% implied move to the upside or downside here. So we're not out of the woods yet, but this is a really strong performance to start off the day.
And yesterday, the swings we saw, the S&P yesterday was down almost 5%, 4.7%, and at the top was up about 3.5%. So what a swing it was, and you're giving us some key numbers to watch. You mentioned 5250 for some resistance right now, so we'll keep an eye on that. You're also looking at the yield curve, a very important telltale story, right?
Exactly. And we've been kind of highlighting this over the last couple of weeks here. And this is just evident that you have to keep this one on your radar. And you can follow this on TOS too. I'll share it on X after the segment here. But you have seen the 10-year, 3-month Treasury yield kind of back out of that negative yield territory here. And it continues to inch to the upside. And actually, Nicole, it pretty much bottomed out on Friday before the S&P 500 really tried to bottom out. And the trajectory is still to the upside here. So we actually have a wide divergence when you're looking at the price action between that Treasury spread and the S&P 500, and you would like to see that spread actually converge. And for bulls, you'd like to see that obviously happen with the S&P 500 kind of catching up to that yield spread here instead of yields moving lower. And so until that trajectory shifts or stalls out here, I think that's going to be another tailwind for the bulls for now. Now, we also have to just keep in mind, I bring this back up, liquidity is very light in this market. If you're looking at the E-mini S&P 500 bid-ask sizes, if you will, or the book depth, you're only sitting at around 4.5 contracts on the bid, 4.5 contracts on the ask. In a regular bull market, Nicole, that would be sitting at around 55 contracts, 60 contracts. So we have a long way to go there, even though you're seeing volume actually increase on a day-by-day basis. So a lot of trading activity taking place, low liquidity, very easy to push prices higher or lower, like we saw that $2.5 trillion spike yesterday and that give back here. And this is the market that we have to really expect. I would still say head on a swivel, be very tactical. We're not at a complete short zone yet for the S&P 500. Once you get to around that 5,300, 5,400 level, that's where you might see maybe some profit taking, and maybe the bears trying to get in and trying to knock this market down. But for now, we have some green on the screen, and I think, as I can hear from the exchange, a lot of people are celebrating about that.
Without a doubt. You know, on Friday when that bottomed, that was a sign to folks to keep an eye out for a change in sentiment or the way the markets could move. What's interesting is how you mentioned volume being very heavy but light liquidity. I don't normally hear those two things together, right? Isn't that
Yeah,
sort of somewhat unusual, right?
It is very unusual, Nicole. This is kind of, once again, a little bit more of a generational type of an event where you have a lot of volume taking place, but there's not a lot of size. So if you're trading a very large order, you can actually kind of push that book either to the upside or downside or fill a lot of orders. That coincides with price volatility in the market. So if you want to see volatility come down, as you talked about the VIX, you need liquidity to come back into the markets. And that's going to be the key area. Until then, we might still have an elevated VIX as markets try to push higher here. But that real flush on volatility is going to have to come from dealers, market participants, institutions really coming back in and trying to backstop this market, both on the bid and ask, if you're just looking at the internals here. And that's the thing to watch over the next couple of trading sessions. And watch out for the Treasury auctions. We can't really confirm that yields are moving higher because we're in the all clear. We might be also seeing maybe some selling pressure and some influence from foreign buyers here. The auctions of the 10-year and 30-year will give us that confirmation one way or another.
Yeah, the 10-year and the 30-year auctions, those will be very important. We'll see how those are received. And we have so much foreign money here too. But just a final quick thought on the volatility. I think you had a chart to go with it. The 60 level that we had seen on the VIX, now we're at 38.86, down over 16% at least. A final quick thought here.
Yeah, so this chart here, we're looking at the VIX minus the front month VIX future. So we're trying to measure the gauge of backwardation, or when we talk about backwardation, we're talking about near-term fear in the market that's not being priced in. The curve is still in an inverted curve for volatility for now, but you are seeing the spread moving lower and lower, and that's because spot VIX or VIX is moving a lot more aggressively than the VIX futures for now, which is exactly what you want to see. We were at a 7 standard deviation move to the upside. Now we're moving a little bit lower towards around a 4 standard deviation move, still elevated on a relative basis, but you want to see this continuing to move down. And like I said, liquidity is going to do that. Nothing else is really going to do that besides liquidity. That'll actually kind of crush these premiums on the wings of the SPX options here, and that's what's going to lower vol, and that could actually be conducive for markets moving higher. I just want to say we're not out of the woods yet. This could be a little bit of a counter trend rally like we saw about 2 weeks ago or so, and you can see the markets kind of fade a little bit more here. So cautiously optimistic for now, decent price action, but don't get married to it because we've seen fake outs before.
All right, Kevin Green. Thank you very much, Kevin Green.